everyone, welcome to this week's edition of Midweek Market Update. I am Ashley Roster with Victory Fiduciary, and today the big story is that everybody's on the same side of the boat. And so you have heard me kind of talk over the past few weeks as we began this new year that markets have had a pretty strong advance here, pretty unsustainable from some of the moves that we've seen, but again, we've kind of seen them and enjoyed them, and then at the same time kind of had that in the back of our minds saying, you know, this probably can't go on forever. And so we've really just seen more of the same over the past week. We had a little bit of a cooling off Monday, and it looks like probably today as well within the market. But by and large, there's really nobody left on the side of the pool anymore. Everybody's in the boat. Everybody's on the same side of the boat. Everybody only thinks that this thing can only go higher and higher, and usually when that happens, that's a good sign that things probably won't, at least for the short term. So market euphoria is really at all-time highs, and I think that's really, you can really show that in example form when you talk about what's happened with Gamestop over the past week. So if you're not familiar, you may have heard, so you know, GameStop's kind of been one of those companies that's been fairly flat, hasn't had a whole ton of innovation, and so you know, not a lot going on, especially when you talk about, you know, valuations of the company and different things. And so investors were betting against GameStop putting something called shorting it, saying that they bet that that GameStop would be value would be going down. And so what happened was if someone puts a short on a company and that price begins to go a little above what that short was, the only way to kind of like cut your losses is for you to buy back at that higher amount. And so GameStop's been in this cycle that we call a short squeeze, is that as shorting investors continue to kind of buy more and more GameStop to kind of cut their losses on their shorts, it's kind of now requiring all the other investors who were shorting it to kind of jump in and have to buy. And now that's just pushing GameStop's valuations higher and higher from the stock standpoint. Now there's no fundamental to support this action. It's literally, it's just all of this investor activity that's happening. It's a phenomenon that we see happen. We saw it with Hertz before, and so it never ends well. People, sometimes they get to make some money on the short run. At the end, it kind of all washes out, and what you find, it's interesting this time when we see these things, is that they show different investors will give out reports about how often search engine requests go out for things like, how can I short a stock? Because people are hearing about this. And so I got to tell you that when it comes to options and calls in the market, they are very, very dangerous. And so if you don't understand how an option works, really not usually a great idea for you to get in. Lots of time people get into trouble with this, but again, a fascinating phenomenon that we're seeing happening right now. And it's really, it just kind of shows what's happening in the market, that we are kind of just overzealous, over greedy, euphoric. This market's only going to go up. Isn't this great? We can put money in a company like GameStop and become millionaires from it. And so, you know, this is, as investors, this is really the time in a market that we need to kind of take a step back, say, okay, why do we own the positions that we own right now? Are we in the right areas? Are we following our rules? Because these are the times that we can see markets begin to get kind of tripped up. And so this is really, this example, the greed index that we're seeing right now, just extreme greed. So everybody believes that this market can only go higher, can't go down. So this I thought was really interesting. So this is looking at institutional money, how they're invested. So we are institutionals, they're all in, and not only are we all in, but we're actually, these companies are leveraged in, so that means that they're taking on even extra risk to be in the market right now. And so again, just a really interesting example of just kind of where we are in this market cycle. Again, not saying that we shouldn't be in at all or that we need to be going to cash at this point, because technicals are very, very strong. Just saying that we need to make sure that we're keeping a close eye on what's happening. And so I told you before that markets are, that we're very overvalued right now. I'm gonna show you in Y charts in just a second kind of about that. But this is really interesting here. So our small cap fund, just to kind of give you an idea, because we have a lot of funds like this, has had a really, really strong advance. It's done really well for us. It's 155% overbought week to week. That's significantly deviated and extended. So this is the type of thing. So we look at, so fund scores 5.5, super strong, especially when we look at the comparison of other small caps. Their average score is only a 4.67. We're on a positive trend. You want funds are on positive trend. You want them to be on a buy signal. So all these things are great when we look at here. This has just been kind of advancing in an upward trajectory. You can kind of see that right there. But again, that's this right here. The fact that we've had such a strong advance tells me that this fund is either going to have to kind of trade sideways for a little bit to burn off that excess, or it may even have to pull back a little bit. That would be a healthy movement for this area of the market. And we have several areas that are like this, and that's just because, again, everybody's on the same side of the boat. So wanted to just kind of show you there. So that's just kind of like a working example of things that, you know, we're looking at, that we're analyzing every single trading day. So let's look here in white charts. So what I wanted to show you also, when we look at the S&P 500, and that is not the S&P 500. So when we look at the S&P 500, you have heard me say before that, you know, we are significantly deviated from our long-term moving averages, and I am here to tell you that that kind of remains. And so here we are here trading 3 standard deviations from our long-term moving averages. So that is significantly overextended at this point. And so, you know, the last time that we were as overextended as we were, this was back in August and September, and we know we did have those short-term corrections, and so we're really at this area of overextension that probably won't be sustainable forever. And so one of 2 things will need to happen. I've been saying this kind of over and over again. Market can kind of grind slowly sideways, burn off some of that excess. RSI right here is at 66, so we're kind of approaching that high point, not nearly as high as we were back in September, something that we're looking at. So RSI, you would expect for it to be extended, especially when we look at how overbought pretty much every area of equities is right now. And so markets will either have to grind sideways, kind of burn off some of that excess, or an exogenous event can happen and kind of cause a short-term reversion to these means here. And so does this mean, okay, so then we should just like not be participating at all? We should just kind of go out of the market, hide, and come back next year? No, that's not what we're saying. But it is important for you to, number one, know where you're invested and why. So why do you have the holdings that you have? And it's just a good reminder that we have to go over what our rules are. You know, so we abide by rules where we let our winners run, we cut our losers quick. We have a buy and a sell discipline, and we don't allow emotion to kind of intermix with that. So when our rules trigger that we should be buying an area or selling an area, then we do it, and we take that emotional part out of it. And so we always we buy with the intention that we will be able to sell at a profit. Remember, if you were here with us when we talked 2 weeks ago about supply and demand, about how there always is going to be a buyer, there's always going to be a seller, and the idea is that what is a buyer willing to pay for the stock that they are looking to acquire? And so right now, buyers are willing to pay significantly extended prices right now with the belief that this market is going to continue to go higher, that they'll be able to sell that later on for a higher price. And what happens is that that's all good when everybody's in the same side of the boat like we are right now, until suddenly buyers are no longer willing to pay that. And so that's why it's important to make sure that you have the rules-based discipline. So knowing exactly why you hold the positions that you have, also being willing to cut them loose if you need to, if it becomes, so we want to follow the trends of the market, because the trends really will kind of drag the markets one way or the next generally. And so we want to make sure that we're following positive trends, positive relative strength. And so for today, we're not making any changes necessarily, but what I would say to you as an individual investor, this is probably not the time to be taking on extra risks that you wouldn't normally take. So if you found yourself being one of those who was kind of Googling about how to short out a stock because you'd never done it before and you weren't sure how it worked, this might not be the greatest time for you to be taking on additional extra risk within the market. It's also a good time to kind of be thinking, am I appropriately invested now? Do I have more risk than I'm really willing to take on? Should I consider putting some hedges in there? So those are things that you can always kind of take back, because again, it's like never a big deal until it is. And so what we're setting ourselves up for is that it's possible that we could see certainly a short-term reversion, even in the short term, in the next days to weeks, and that's literally only because of how deviated we are here. We're really at extremes at this point, and when we see everybody being on the same side of the boat, that's typically, and that's everybody on the boat is like nothing bad can happen, that's usually when something can. So again, I'm not being bearish, I'm just being realistic that we just need to make sure that we are following our process, the rules, making sure that we're in the right areas, that those areas that we can kind of defend their relative strength and their momentum, and that their price action is moving more positive than before. And so that's kind of how this works for the long term. If you have questions, I definitely would love to hear from you. And this is my contact information here. So AshleyR@victoryfiduciary.com. I love when you do send me an email, let me know what you liked about the video, or if you have questions, or I'm even starting to get people say, hey, if at some point you can kind of talk about this, that would be really helpful. So I appreciate that feedback. Hope to hear from you soon. Again, we're just going to have to wait and see if this market kind of continues to grind higher, or if the market decides that it's going to maybe have to take a little pause this week, yesterday and today. Nothing crazy, but definitely has been kind of just like grinding sideways, not doing a whole lot of anything. So we'll have to see what happens for next week. But again, I'm Ashley Rosser with Victory Fiduciary. Thanks so much for joining us. Hope that you'll join us next week. Stay safe.